Morgan Stanley launched its Bitcoin ETF MSBT on April 8th, and this is the first Bitcoin ETF issued by a bank rather than an asset manager. So it pulled in nearly roughly $62 million worth of trading in its first week per Farseed. MSBT is the first visible component of a vertically integrated crypto stack that Morgan Stanley has been assembling since January, and the other pieces are Ethereum and Solana ETF filings, and a pending OCC National Bank Trust Charter, retail crypto spot trading through E-Trade, and a tokenized money market fund. Morgan Stanley runs $9.3 trillion in client assets through 16,000 financial advisors, and that distribution is the variable that actually matters in the stack, because tons of people pretty much get their financial information through their financial advisor. In January, Morgan Stanley filed the S1 registrations for Bitcoin, Ethereum, and Solana Trust, and the Solana Trust includes a staking component, which would make it the first ever major bank ETF filing with staking yield built in. Over the years, you've had a lot of different ways to earn staking yield, but Morgan Stanley offering it is definitely the most trustworthy. If the SEC clears that structure for Morgan Stanley, it sets the precedent for every alt L1 ETF downstream. So staking yield becomes a part of a standard product that many more people can offer. In February, Morgan Stanley applied to the OCC for a national bank trust charter, and the proposed entity, Morgan Stanley Digital Trust National Association, would cover digital asset custody, fiduciary staking, and token transfers. So currently, Coinbase did beat them to conditional OCC approval on April 2nd, which is why MSBT's custody currently sits with Coinbase County and BNY Mellon. But once Morgan Stanley's own charter clears, custody moves in-house. Separately, though, Morgan Stanley is preparing to launch a retail crypto spot trading through E-Trade for Bitcoin, Ethereum, and Solana in the first half of 2026. Zero Hash is providing the liquidity, custody, and settlement infrastructure, and the firm has also publicly said it is exploring tokenized money markets, funds, and tax harvesting services built on top of the stack that they've created and passed. Amy Oldenburg, who runs Morgan Stanley's digital asset strategy, put it this way: "We're not going to just stop at Bitcoin. It's really about the longer term journey." And what this means for pretty much every other spot Bitcoin ETF issuer is that they're renting distribution. BlackRock, Fidelity, VanEck, ARK, and pretty much all of these different players need to convince financial advisors on platforms that they don't own to recommend their products. Morgan Stanley, in this case, is the first issuer with an advisor network it controls, which changed this deal quite a bit. 16,000 financial advisors can essentially be your distribution moat. $9.3 trillion in client assets and a house ETF those advisors can also allocate into client portfolios without friction. And the token selection that they choose is its own signal. Bitcoin, Ethereum, Solana, no XRP, and no other L1. So Morgan Stanley is telling the market which assets it actually takes seriously and considers them return of the package for other wealth clients. This is seen in a similar side note, Skybridge Capital's focus on investing so much in Solana and how much it can revolutionize the institutional and formal wealth trading side. Once Morgan Stanley owns its own digital asset custody through the Trust Bank Charter, it controls the entire stack, which is the ETF wrapper, the underlying custody, the staking yield, and the distribution, and eventually tokenized bank products running on those rails. MSBT is the entry point, and the longer build is a full stack native, bank native crypto business. The 2024 Bitcoin ETFs were wildly successful, but they brought crypto into the RIA channel, and Morgan Stanley is bringing it into the wirehouse, which is a different distribution system with different capital and different product expectations. BlackRock has already won the asset management layer, and IBIT sits at $53 billion, which is the largest crypto ETF in the world, and that fight is pretty much won for BlackRock. The live question is who wins the next layer, which is advisor distribution and bank native tokenization, which many people are fighting for bank native tokenization right at this time. Morgan Stanley is the only wirehouse pointed at that layer with scale at the moment, with Bank of America opening the door back in January, letting wealth advisors recommend crypto allocations. Schwab announced that spot Bitcoin and Ether trading at 0.75% trade last Thursday, and the wirehouses and discount brokerages are converging on the same thesis, but Morgan Stanley is the one shipping products across the full entire stack. The Solana ETF filing is the one to watch closely though, because Solana is a very important asset. If it clears the SEC with staking yield included, every major L1 ETF downstream gets easier. And if it gets blocked, the Morgan Stanley one gets blocked. The categories can stall at Bitcoin and Ethereum for another year, and the tokenized product roadmap gets further pushed out. MSBT is a $62 million starter, and the longer game is that Morgan Stanley is assembling a bank-native crypto business with a captive distribution. With other entities, they have to build up their distribution, and on the crypto side of staking yield, usually the centralized exchanges are the ones fighting for distribution. Well, they already have the distribution, but they're also fighting for more users for their staking. The next 12 months, however, tells whether the wirehouse model compounds the way the RIA channel did, and that is very important for the rest of the market. Thank you.